Have you ever noticed how price magically reverses at certain levels, almost like the market is following a hidden formula? That's not magic, it's Fibonacci. In this video, I'll show you how traders around the world, including banks and institutions, use Fibonacci retracement to predict reversals, catch smart entries, and avoid retail traps. We'll break down real chart examples, reveal the most powerful Fibonacci zones, and explain why the golden ratio, 0.618, is the heartbeat of price action. If you've struggled with timing your trades, this might be the missing piece you've been looking for. Let's dive into the Fibonacci blueprint that drives the market. This is the AUDJPY daily chart, and what you're looking at is a classic example of how powerful the Fibonacci retracement tool can be when used correctly. The Fibonacci has been applied from the swing high at 97.381 down to the swing low at 86,065, capturing the entire bearish leg that occurred between February and April 2025. This allows us to identify important retracement levels where price could potentially react, either by reversing or consolidating. These key Fibonacci levels act as psychological zones, where both institutional and retail traders tend to place their entries, exits, and stop losses. Now let's break it all down level by level, including the purple zones that highlight key market reactions. Starting at the top, the 0.236 Fibonacci level around 94.11 marks the first key retracement from the bearish leg. This level acted as an early resistance point when price started recovering. You'll notice the market paused and consolidated here, showing hesitation as sellers re-entered. This area is marked with a purple zone because it represents an early smart money rejection level. Price struggled to break through on first attempt, indicating that short-term sellers were defending this level. Moving down, we have the 0.382 Fibonacci level at 91.95. Although this level didn't create a massive rejection, it's still important as it was part of the transition between bearish retracement and bullish continuation. Price briefly touched this level before moving higher, and this is often where indecision candles appear. Right below that is the 0.5 level at 91.723. This is one of the most critical Fibonacci zones on this entire chart. It's not only a psychological midpoint of the bearish move, but also a heavy reaction zone. That's why a wide purple zone has been marked here. You can clearly see the price tested this area multiple times with long wicks and reversal candles, confirming that buyers were stepping in. Next comes the golden zone, the 0.618 level around 90.388. This is a highly respected level by institutional traders. Smart money often accumulates here, taking advantage of panic-driven selling from retail traders. In this chart, we can see a strong bullish rally begins from just above this golden level, which confirms that institutional buyers entered the market aggressively. If you're looking for confluence, this area also aligns with previous structure, and long wick rejections, making it a perfect zone to plan long positions. Below that, we arrive at the 0.786 level at 88.487. This is considered a deep retracement level, and many retail traders avoid it, assuming a trend reversal. However, this is where smart money traps retail shorts. You'll notice a sharp reversal candle forming here, followed by a bullish breakout. This is why another purple box has been placed at this zone. It's a clear demand area, often missed by novice traders. Price didn't spend much time here before launching upward, which is typical behavior in high liquidity zones. The 1.0 level at 86.065 marks the end of the Fibonacci retracement and also the major swing low. If price ever breaks this level decisively, it would confirm a bearish structure shift. But in this chart, it acted as the perfect reversal base for the current bullish trend. Below this, we can see the projected 1.272 Fibonacci extension at 82.988, which becomes the next logical target in case of a full bearish collapse. But as of now, price remains well above all key support levels. Now let's shift focus to the dotted trend line you see on the chart. This trend line connects the major swing low in April to the recent higher lows, indicating a strong bullish structure. As long as price respects this ascending line, we can expect buyers to remain in control. Interestingly, the current price, around 95.81, is hovering right above this trend line and just beneath a small resistance, suggesting a potential bounce if bullish momentum continues. Finally, the most important areas you've marked with purple zones deserve special attention. These aren't just random highlights. They represent the exact points where price has historically shown reaction. The upper purple box around 94.11 is a short-term resistance. The mid-zone between 91.72 and 90.38 is a high-probability demand area. And the lower zone near 88.48 is a deep liquidity pocket where smart money previously stepped in. These zones are ideal for planning your entries, stop losses, and targets, especially when combined with price action signals like engulfing candles, pin bars, or order block confirmations. To wrap it all up, this AUDJPY chart showcases the power of combining Fibonacci retracement levels with real-time price structure and market psychology. Each level tells a story, from shallow pullbacks at 0.236 to golden ratio support at 0.618 to deep reversals at 0.786. Every stage of price movement reflects how buyers and sellers are positioned. If you're a trader looking for precise entries or want to understand how smart money moves, this analysis is your blueprint. Always wait for confirmation and trade with confluence. And that wraps up our complete Fibonacci breakdown on the AUDJPY daily chart. If this video helped you see the market with more clarity, don't forget to like, comment, and subscribe to Financial Freedom FX, where smart traders come to level up their skills. Got questions? Drop them below. I reply personally. And if you want more real chart breakdowns like this, check the links in the description. Until next time, trade smart, stay consistent, and remember, it's not about how much you trade. It's about how well you understand the market. See you in the next video.